Everybody, and welcome to CPI FOMC Wednesday, June the 12th. Today it is June 12th. Today is CPI prior to the opening bell, FOMC meeting at 2 o'clock. Your FOMC prep is extremely detailed in your weekend email, and I would assume or prefer that you go back to your Sunday email from the weekend and very much review it so you understand what is going to be taking place with today being an FOMC day. However, because we do have CPI prior to the open, which my memory, I don't recall that ever happening before, it's going to be a little bit weird because we're going to get a CPI reaction and then we're going to get the FOMC meeting later today. So looking over here at the futures, Dow pretty much flat, still well below the 50-day moving average, with the NASDAQ being the only market left in the world, is still hovering well above the 5-day moving average, with the S&P having recovered the 5-day moving average after coming down and hitting the rock bottom, what I had said was the bottom for the better part of the last 5 days. It's a week ago when it was placed. And then you have the Russell 2000, which the Russell 2000 is what your dick is when you get over 50 years old. So that's the Russell 2000. The Dow Jones may as well be the same thing. So it's all in the NASDAQ. So I'll leave you with that and leave you off here since we're already on that screen and I didn't plan on it, but this is a heat map from yesterday. The S&P closed at new all-time highs, and you find me new all-time highs anywhere in the stock market, anywhere except for, oh, fuck, look at that, Apple. It's all in Apple, which Apple happens to be part of the Dow, part of the NASDAQ, but also part of the S&P 500, and is one of the highest weights. And again, like I said, they will use by any means necessary those weighted names that you see here, which are big, humongous blocks, in order to prevent the market from breaking that 53.30. So I think I'm done with that. I don't want to be on this until the end, and here is SPY, but I will get to that in a minute. So here we are. S&P June 11th closed at 53.75.32. 53.75.95 was the highs, and once again, I was wrong. On Wednesday, June 5th, is when I started talking about that 53.30 is the bottom. 53.30 is the bottom. 53.35, 53.31, 53.31. And yesterday we hit it. But half of you, or the majority of you, weren't able to log into your Thinkorswim or your Charles Schwab accounts. They were all down. Don't know why, but they were down. 53.27.25. That was our lows. And then what we do? We ramped up into the close all the way up to a new all-time high, 53.75.95. Now let's look at that. Looking back at the beginning of the month for the week of June, and again, going backwards to go forward, the bullish possible view, 53.65 plus or minus 10. The bullish bear possible view, 53.65 plus or minus 10. Once again, wrong. Here's where we are. SPY, new all-time highs, 537. Like I shared with you in your email yesterday, where the SPY 532 puts for today were up better than 40% as we came down and hit that 532 early in the morning when most of you were unable to log into your accounts with Thinkorswim or Charles Schwab. 532 is your 530. You can see it right there. What I'm looking at here is the end of May, that bottom, and the projection of how we are to where we are, which you can see better on the SPX. I will leave this, move here. Here is our bottom on May 31, which was a Friday, and then your email talking about we're going to 53.65 plus or minus 10, and we got there, and we're here, and we're still here, and this is coming off of when we were down here. So it is what it is, and here's where we are. And we are up here at 53.75.95 as we go into CPI. CPI don't want to be on this screen, want to be on this screen. CPI, as of, again, yesterday, your overnight 53.60, 53.55s, they were down below $1. You got better than 100%, but then again, most of you were unable to log into your accounts with Thinkorswim or Charles Schwab. FOMC days. These are your FOMC days, and again, it's FOMC without anything but the FOMC. And as you have all of your detail, very detailed in your Sunday weekend email, this is all going to be taking place between 2 o'clock and 4 o'clock. On your CPI days, now we got a little bit of a different story here. CPI days, again, wherever your gap is, that tends to be your direction for the day. Tends to be. But then we're going back into 2023, 2023, 2023. Different world in 2023, especially when you talk about November, because that was when we started saying that we were going to get 4, 5, 6 rate cuts. And again, remember, CPI, this is about inflation. And here's a little trick to that.
That's the cost of living crisis. Suddenly we went up from prices being around there to prices being there. And you don't really see that in this data, okay? Because inflation is really just measuring the difference between that and that. And if you look at those two lines, you're talking about a 2.3% change. That's the number we're talking about today. But for a lot of people, it's not about that. It's about the difference between this and that. And when you look at the difference between this and that, that's 20%. And I think that's the dichotomy here between these inflation numbers where it looks normal and this, which is really not normal at all.
So, again, here we are with 29 trading sessions today without a minus 1% visit on the SPX intraday. And coincidentally, it happens to bring you just fractionally below that 53.30 should it occur today. Right there at 53.21.57. That is where your minus 1% would be. Minus 1% on SPY would be right there at 531.58. Again, having gone over this, we are now into the longest streak of S&P 500 trading sessions without a minus 1% intraday move since December, prior to COVID.
Ceasefire means that somebody sees a fire. It could be any kind of fire. It could be a big fire or a small fire, a bonfire or even a candle flame. It just matters that somebody sees a fire. That's why we call it a ceasefire.
Just put that into your head for a minute, and I'm going to leave you off with something in a little bit. QQQ, new all-time highs on the QQQ. I need to move this, so bear with me, because, again, I'm not a rocket scientist. I'm a musician, whatever it is. I need to change this because that is wrong, and I need to change that because that is wrong. I'll do that later. 3 gap downs in a row, 2 big green closes in a row on Monday and on Tuesday, and no plus 1%, no minus 1%, but again, it's all rotating around over there in the QQQ, because let's go at this. Let's do it. Google should hit 200 this week, because that's what the QQQ is telling you it's going to do. Apple, how the fuck do you gap down and start moving down here to minus 192 at 5 o'clock yesterday morning, and then all of a sudden come out and say, I'm not a fucking whatever. I can't even come up with it, and get this move from minus 192 to plus 207. Whatever. Oh, Apple's going to 250 this week. Meta, decent little recovery over on Meta as it came up and failed that 503. And then yesterday, they just gave it a little shove to the upside above that 503. Meta is going to 550 this week. Got to turn that off. Microsoft, they've been pushing Microsoft since last week, since S&P 5330. And here again, Microsoft. This week, Microsoft should be heading to 475. And then you come over onto Tesla, and Tesla coming down here to this big 167, 165 spot. Pay no attention that it's below the 50-day moving average. In fact, pay no attention that it is below the 50, 5, 10, 20, 100, and 200-day moving averages. Don't even give that a second thought. Tesla will be going to 200 this week. And then we come over onto Amazon. Amazon, again, the same one. After they cratered it down there into the lows on Friday at the end of the month of May, nice big move up here, back again into that plus 183 rejection zone. But because we are not able to talk about anything rejection or bearish, Amazon will be going to 200 this week. And then you've got NVIDIA. NVIDIA's just been holding off. They've just been stalling, letting everybody, get used to the fact that the stock split. And now later this week, being that today is Wednesday, we should see NVIDIA trading at around 150 at the end of the week. And then you come over onto AMD. And again, with AMD, I apologize for having not had it ready, but with AMD hovering above the 200-day moving average, which is down there at the beginning of the year's open, 2024, 144, the 50, the 20, the 5, the 10, the 100-day, AMD should be trading above 185 by the end of the week. So bring us on to where we're going here, because the IWM has not only been getting the shit kicked out of it for the better part of a week and a half, call it 2 weeks really, but now we're starting to crater down here below the 200s, starting to crater down below the 200s. So bring it off onto the charts. Come back over on the SPX. SPX, again, we were looking for 53.65 plus or minus 10. We got 53.65 plus or minus 10.95. I was wrong. That's where we're at. CPI coming out before the opening bell. Again, 53.10. That is your bottom. That is your bottom. Should you get down below 53.30, sorry, 53.10. What are you talking about? 5330, 53.30. Until there is a break below 53.30, we have absolutely nothing to talk about. Nothing. QQQ, again, showed you what I was looking at. 1, 2, 3. Possible little dip here on the 4. And then if you really want to go in and nanoscribe this, this looks like a very nice 5 for what we again said. 46, 18, 16. Very possible over there on the QQQ. Make your assumptions as much as you want. And then you come over onto the IWM. Same time frame, same periods that we're looking at here. May 31 into where we are. And you've just got the IWM getting the shit kicked out of it. But there again, nobody cares about the IWM because it's not NVIDIA and all the other guys. So I'll leave you off here with DIA, the Dow Jones, DIA, and looking at a wider time frame because I am looking over here down at the, nope, that is not. I will zoom you out here. Here's DIA coming off the April lows over here onto the May lows, over here up to a new all-time high, and now you're cratered down to the downside. And we've talked about this before, how, we're kind of looking at this going somewhere into the 375 down to around 370 area to complete itself. JP Morgan yesterday got its opening bell, kabam. And you're down here at that 193. That, remember how much 193 gave us a problem? Right there, doing nothing. And then your opening bell yesterday, slam, down below the 50-day moving average. The dollar, looking here at higher highs with the 200, the 100, the 10, the 20, the 5, the 50-day moving averages, all below, which is bullish on the dollar. But nobody gives a shit because it's not NVIDIA or Amazon. So I leave you here with this screen and I bring you over to, thank you very much, T2Fire, because although I might be intelligent, well, some might not agree with that, I don't know everything. And he was able to share a tweet from, I'm not even going to try and explain it, but the links in the room. It has been 322 days since a minus 2% down day. And we're looking here back at March of last year when we had our last minus 2% down day on the S&P. This was the longest streak in history. I remember this. This is talking about the past 10 years, but this was the longest streak, really. I think it went back to like 1950, was 351 back here in September, October 2016, going into January, February 2018. And that was your Trump rally. And that's what this is. That's your Trump rally. After Trump won and trading was halted overnight because S&P futures were down 5%, and by the time we opened up the very next morning, it took less than 3 minutes for the S&P to be green as they bought it all up overnight after the reaction that Trump won. March 1, that was our first decline. Not even a dip intraday. It was a 3-week move for a less than 3% decline. We got another one here in August. And all that cratered up and sliced up and up until the final Friday of January, January 26th of 2018. And 9 days later, we were down 11.83% on the S&P 500. Failed over here in February on our bounce. And then in March, we came down again into that April 2, fractionally missing the February 9th lows. And we cruised up there into September, but none of you all care about that. All you care about today is what can you day trade? What can you do on the S&P 500? And again, this is what we're looking at. This is what we've got. CPI comes out prior to the opening bell. The FOMC is at 2 o'clock. I'll see you guys in the chat room. And yeah.
For instance, the financial situation of the United States. When I talk to my conservative friends right here, they always tell me that the problem is high taxes. But they're wrong. Of course, high taxes are extremely high here in the United States. I give you that. You're right in that. But that's not the real problem. The real problem is not the high taxes themselves, but the fact that they are not even really funding the government. But even those high taxes, higher than a lot of places in the world, but even those taxes are really funding the government. So who's financing the government? Government is financed by treasury bonds, paper. And who buys the treasury bonds? Mostly the Fed. And how does the Fed buy them? By printing money. But what backing does the Fed have for that money being printed? The treasury bonds themselves. So basically, you finance the government by printing money out of thin air. Someone could ask, well, so if the government can print unlimited amounts of money out of thin air, why did they collect taxes? I mean, in theory, it would make sense, right? If they can print unlimited amounts of money, why would they need taxes for? The answer is simple, but it's very shocking. The real problem is that you pay high taxes only to uphold the illusion that you are funding the government, which you are not. It's shocking, but it's true. The government is funded by money printing, paper backed with paper, a bubble that will inevitably burst. The situation is even worse than it seems, because if most Americans and the rest of the world were to become aware of this farce, confidence in your currency would be lost, the dollar will fall, and the Western civilization with it. If the next president of the United States doesn't make the necessary policies and structural changes, sooner or later that bubble will burst. There's still time. You don't have to make the same mistakes we did in the 60s and the 70s. You can still jump before the water boils.